I do believe we're in a wartime scenario, and whether that's an economic war, that's obvious. We are. There's absolutely no doubt about that. It's a 5-year overnight success, right? In the end, I think it starts with a project. It starts with the commodities.
Sam Lee joins us once more. He is the CEO of NorthIsle Copper and Gold. He was on the show late last year. The copper prices continued to run, and now it's hit new all-time highs, coinciding with all-time highs in gold and silver as well. So what are miners, specifically critical mineral miners, doing in this unprecedented environment? Sam's going to give us an update. Welcome back to the show, Sam. Good to see you.
Thank you very much, David, for having me on again. Good to see you as well.
Let's start by talking about why copper is critical today. So I want to show you the story that came out a couple of weeks ago. Trump Project Vault stockpile. It's a first of its kind, a strategic reserve, if you want to call it, of copper in the U.S. Project Vault, which is a first of its kind public-private partnership. The U.S. Export-Import Bank will provide $10 billion in the form of a loan, with about $2 billion coming from private capital. My first question regarding this issue is why? Why now? Copper has always been crucial, let's say, to the construction of real estate, data centers, expansion of our economy, electronics. But the government in the U.S. has deemed this a critical time to make a strategic reserve for copper. Why do you think that's needed right now?
Sure. I'll reiterate my comments, which was somewhat controversial last year, which is I do believe we're in a wartime scenario. And whether that's an economic war, that's obvious. We are. There's absolutely no doubt about that. Whether that translates into physical war, I really, truly hope that does not happen, clearly. But in these scenarios, under these circumstances, the asset class that dominates our hard commodities. That's why the government of the U.S. is making this very bold move towards securing critical metals, including copper. Obviously, downstream activities, smelting has been reactivated. The discussion around permitting smelters in the U.S. and Canada and other areas to achieve that downstream product. Security has come into certainly the public dialogue now. In Canada, I think we had mentioned last time that the feds had carved out $2 billion as part of their budget to start investing in critical metal projects at this development stage, the stage where the projects most need it. And so that level of capacity funding for not only the project, but First Nation communities that need to have the capacity to move these projects forward in concert with the project proponents. This is the capacity that the federal government in Canada has initiated last budget. And then just recently, last week, the provincial government has carved out approximately $400 million as part of their budget to support and align critical metal projects and other critical projects in the province alongside this $2 billion sovereign wealth fund that Canada announced as part of the last budget. So this is really activation of really the holistic condition of the world today, which is it's becoming more and more unstable. Like, that does not negate the fact that these driving economic factors around decarbonization and electrification as it relates to AI power consumption and electrical distribution, all deriving the need for copper, that doesn't go away. But that's not the near-term reason that is driving this, at least from what I can see. And so, I do think that as we go into this level of uncertainty, there is going to be a greater grab on products like ours. I think we talked about on the midstream side, the concentrate side, the copper concentrate side. Last time we spoke, it was in negative TCRC. These are treatment charges, refining charges territory. That is the product that we would sell to a smelter. They would pay us money to send that concentrate to them to process. Whereas in our PEA, we would pay them $65 per ton to process our material. Well, that situation has gotten from negative territory to even more negative territory. And that shows again that there is this continuing conflict in the world around securing very, very important commodities like copper concentrate, which would be our primary product. So all that to say, I think this is an environment where you've clearly seen activation in tier one countries like Canada, like the US, because we are seeing also a degradation in security and reliability around other nations that in the past have actually provided the world with its commodities, but today have gone into so much political disruption that they no longer have the political will or the social license to progress these important projects moving forward. And that's where the key countries, the tier one countries, Canada, US, Australia, that have the infrastructure, that have the history, that have the people, that have the projects, you are going to see advanced very, very quickly.
This is your stock, NCX on the TXXV, and we know that miners have been traditionally levered to the metal. That's one of the reasons why investors look at the mining and resource space, especially at a time when the bullions are doing so well in themselves. We want to look for that additional leverage. Now, your company has not only levered to copper, it's done so in orders of magnitude. I want to ask you how this happened. 629% up since the beginning of 2025. I mean, if we overlay the price of copper, we can see that copper has risen, but that's just a correlation. The actual percentage move of copper over the same period has been about 55%, which is impressive for copper, but nowhere near 629%. So what else have you done as a CEO, as the leader of management, to ensure that, I guess, leverage is maintained in orders of magnitude during this time?
Absolutely, David. And perhaps I could start with a very funny quip. It's a 5-year overnight success, right? In the end, I think it starts with the projects. It starts with the commodities. We're not only copper, as you know, we're also gold. It's almost equal distribution as per our preliminary economic assessment that we released last year. Those were obviously at prices that was tremendously different than today. It was $4.20 copper price, but $21.50 was the base case assumption that we used for that PEA, and that was not only it was less than a year ago. And so clearly the commodity markets have moved. We are one of the few that have leverage to gold in addition to copper. And as I've always stated in the past, gold is a financing bridge to big projects, right? The issue with copper projects that are owned by single asset companies is the fact around capital intensity is just too big. And the reality is we do have a very big project, but we're able to bridge that capital intensity through our gold. So our motto is actually unlocking copper value through gold. So I think that's been a very big part of our overall success from a macro side. What have we done as a company in order to try to take advantage of that over the last 5 years? Well, it all comes through really good exploration. So we own approximately 40 kilometers, 100% of a 50-kilometer bona fide copper and gold porphyry district, starting at the BHP Island copper mine, and extends all the way to the northern corridor area, which we have defined the high margin phase 1 in our PEA. So we identified two things 5 years ago that were hurdles for our company. One was real, one was perception. The real hurdle was the fact that our project was capital intensive. At that time, we were looking at a capital intensity of about 0.7 times NPV to CapEx, which is actually a normal capital intensity for big projects. But because we were a $100 million market cap company, the market, rightfully so, just didn't believe that it was a project that we could advance. And so we went to the drawing board. We looked at our menu of options around where we could focus our exploration dollars on, and we chose the at surface, near surface, higher margin, higher probability areas to focus our exploration group. We made the discovery at Northwest Expo, which was over 2 grams per ton, over 135 meters. And that now has been the driving force towards reducing that capital intensity, looking at mining out the higher margin areas in phase 1 that effectively bridges to the overall 29-year life of mine. The second issue that we had identified as an irrational issue was the perception that you cannot mine or get permits on Vancouver Island. And so this is if for those that Vancouver Island, it's a very big island. It's about 500 kilometers in length. We're about almost 500 kilometers away on the northern end of the island from Victoria. And over the past century, mining, fishing, and forestry have dominated the industries in that area. And so on Friday, we were very happy to have and host Minister Brar in their historic announcement around including NorthIsle copper and gold to the Critical Minerals Office. This was an announcement that was hosted at the North Island project site, which is on the lands of the Quaguth First Nations group. We had all 3 First Nations attend this celebratory ceremony, including the Quetzino First Nations group, Quaguth, and Tlaxcala. So this is the first time that all 3 First Nation groups have been in a room in a public event that has identified the project and that they've self-identified with the project. And so this is really the starting point around activating not only the province, but the federal government's initiative on expediting projects. We're not doing this without the First Nations consent and consultation and consensus. Today, or at least Friday, was really that identification of the working group for this project and the desire to move it forward responsibly, but expeditiously.
And at a time when these metals are becoming so critical, investors are wondering why we need to look at the resource mining space to begin with. Going back to the leverage question, the metals themselves have been doing so well. As you know, we've talked about copper, gold, silver, another example. I know it's a slightly different sector, but investors are looking at the price performance and saying, gee, I'm making 55% return on copper in itself. I can just buy copper futures, or I'm making 150% on silver, whatever the case may be. Why do I need to look at a silver company or a copper company? As a CEO, how would you answer that question?
Yeah, so there's so many answers to that question, but the mathematical answer is leverage, as you said before, right? I mean, if copper prices go up 10%, and even if costs go up 10%, there is leverage or margin expansion around the opportunity. And that's why in an environment where the investor confidence is strong, they would rather invest in producing companies that have that margin leverage to increasing commodity prices. So the interesting question, though, today is fine. Let's invest in producing companies. And that's what has happened over the last year to 2 years to achieve that leverage expansion. The question then becomes, what is the implications for the junior market that does not have production and cash flow, which we would fall into? And the answer is this, at least specifically as it relates to the US, because I've been marketing in the US for a few months now, and the condition has changed very significantly. In New York, for example, the majority of generalist funds don't really understand the non-producing, non-cash flowing proposition. So the price to NAV metric, for example. And however, because their funds have underperformed over the last year because of this incredible movement in commodity prices and the under investment in that space, they are looking exactly for that leverage for the catch-up trade, right? And so the answer to this question, I believe, is going to be because they have to look at the leverage trade to catch up and to effectively meet the return criteria relative to the whatever index that they are facing today. And in summary, because they've been underrepresented, or the mining space has been underrepresented, they are going to have to look at higher leverage opportunities for that catch-up trade. And those higher leverage opportunities come from smaller producing companies, the intermediate junior companies, of which there are very few in the copper space right now. And arguably they have seen that trade. And then they're going to start with the most advanced development, and then less advanced development, and then even potentially exploration. The challenge for the US generalists, though, right now is that they don't understand that space. So there is a tremendous amount of effort around not only me, but certainly the institutional bank-owned dealers and the other CEOs that are really trying to get that understanding of the junior space and the value proposition, even though there isn't a traditional value proposition because we're not cash flowing, there is a value proposition as it relates to development projects like NorthIsle, where you can see a very logical de-risking process from PEA to PFS to FS to FID. And with those de-risking opportunities comes re-ratings. That is very well understood in the institutional community, and in an upward trending environment, it is actually the driving condition of value for an institution. So we're going through that process right now.
NorthIsle Copper and Gold is currently at about a $950 million market cap, and like I mentioned earlier, it's gone up pretty much sixfold in the last year.
Yes.
Given how far and how fast the company has grown in size, just valuations wise,
yes,
have you as a CEO changed the way you look at risk and the way you prioritize spending in projects now that you're 6 times larger than you were last year?
Yes, absolutely, we do. And so to put this in context, think of the opportunity at NorthIsle as a value and growth proposition. Okay, so let's start with the value proposition, which is going through pre-feasibility, feasibility, and FID as quickly as possible. Well, this announcement on Friday that the government has prioritized our projects within this critical minerals office, well, that is what gets you through that de-risking period in the quickest possible time. Okay. And that's really important for an institutional investor because they want to see you get to yes as quickly as possible. And currently, based on the 5 analysts that cover us, we're currently trading on average at about a 0.3 times price to NAV metric. So this is a metric that isn't really understood very well by the generalist institution, but what it suggests is that we're about 30% of our trading at 30% of our underlying intrinsic value of our net asset value based on consensus price estimates, right? And so as you de-risk, there is a value re-rate proposition that is, again, very well accepted within the institutional community. As you de-risk, you should get a higher and higher rating, closer to 1 and potentially beyond 1, right? So there is a value proposition associated with what we're doing and how fast we're doing it, which again is the reason why I think we've gotten such a positive response from the Friday announcement around prioritizing this project. On the second part of it, which is the growth opportunity, that is where we look at things a bit differently, right? So we've always had the strategy around trying to take advantage of our 40-kilometer, 100% owned bona fide porphyry district, right? But as a $50 million company or a $100 million company, you have to stay shallow. You have to stay at surface, and you have to go for things that have an almost immediate impact around the project definition, right? And so when we went back to the drawing board in 2022, that's where we're focusing. At surface, high probability, higher margin rock that would allow us to be in the position that we're in today as part of this very attractive PEA. So in 2026, we're not only continuing to grow that high value, high margin rock at surface in the northern corridor, which we've already started drilling on, but because we're nearing $1 billion market cap company, this is the time to be bold, right? And this is the time to take full advantage of the fact that we own 100% of this bona fide porphyry district across 40 kilometers. And so the second part of our strategy is twofold, but it's the same objective. The objective is to identify world-class tier 1 mineralized bodies with thick intercepts and high grades. Very high goals here. But within that strategy, within the context of that objective, we've broken it up into areas where we have high conviction because we have a lot of data to find these drill intercepts, discovery holes, and where we have a higher degree of confidence. And so we're currently drilling that program out today. Okay. And then the second component of this objective, the second bucket of the objective, is to focus on the district scale exploration, which is going to be less data that is going to inform our decisions. Same objective, find world-class discoveries, but less data, so less conviction. So therefore, we actually are currently spending $2 million building out that database, doing the surface sampling. We have the IP, we have the mag, we need the surface work right now, and that's currently what the team is doing right now. So if you want to stage this in terms of the growth proposition that we did not have the ability to advance as a $100 million market cap company, but we do have the ability now to advance as a nearing $1 billion company, is near term, we're drilling out the things that are going to enhance the current project economics today, which is high probability. We're also drilling the discovery of the near-term high confidence proposition, but at depth. So instead of hitting only 300-400 meters at depth, which is traditionally what we've done, we are looking to be bold and go find that source. We already see 1% copper equivalent, but we're at surface, but we're essentially looking at 50 to 100 meter intervals. Well, all this stuff comes from below. It doesn't come from the air. It comes from below. So we need to be a little bit more bold in how we target those targets. And we're doing that right now. We're drilling those targets soon. And then the third is the district scale exploration, where we have to collect all of the surface work.
This process of de-risking, which is to prioritize, basically sure bets. I wonder if this is a natural process of just getting bigger and more mature as a company, which maybe you can help us understand. Is this something that all junior explorers and developers eventually go through at some point in the life cycle? Or is this something specific to NorthIsle that is timeline specific, meaning let's say your valuation didn't grow from $200 million. You would still be doing this de-risking now in 2026?
That's a really good question. I am a market guy, and I don't rely on governments to tell me that the project is sanctionable. So if the government is the only person that's saying, yes, we think you're critical to us, and the market doesn't agree with it, I don't invest in my time into that opportunity. So what's happened today is that not only has the government said you are one of the top priorities from a development perspective in BC, but the market is also saying that as well. So that gives me the confidence that this de-risking process does have the support of people that can not only appreciate, but also establish that value proposition re-rates as you get towards that yes. The short answer to the question is no. We would not go down the development process if it was only the government that was, quote, sanctioning and supporting our project.
If someone were to say to you, look, it sounds like you're probably shifting priorities into what types of investors you're trying to attract right now, would you agree with that statement?
So the investors are a consequence of what we're doing strategically and the successes that we see strategically, right? So our objective is not to get bigger and better and more liquid shareholders. Our objective is to execute our strategy. And there's no doubt in my mind that bigger institutional shareholders will help us because they do invest in a different part of the value curve. So lower risk, higher reward proposition types of investments. In addition to that, there's another bucket that has now been, I think, very openly activated, which is the sovereign wealth fund bucket. So right now, we now have the federal government that has explained that they have carved out a $2 billion sovereign wealth investment strategic bucket for projects like us in the development stage that goes through the development faithfully and that could get to yes quickly. Right. So we're all waiting to hear what that actually looks like. But from my perspective, I think that we would be one of the top propositions within that bucket. The BC government, as I mentioned, just announced a similar type of fund as part of their budget last week. And now we know that we are the top priority in British Columbia among the developers in the critical metal space. So, I think that is just a consequence of executing our strategy and the proposition of the opportunity, and it'll be the outcome of what we think is going to be a very successful strategy.
But if, let's say, a retail investor were to say to you, well, that sounds great that maybe you're positioned now to attract sovereign wealth funds and pension funds and, bigger institutional investors, but how does your de-risking strategy benefit me if I'm looking for really bold, high-risk home run plays that you're kind of not prioritizing now anymore?
Great question, David. And that's what distinguishes us from the rest of the junior space, right? In the junior space, you typically have just development or just value proposition or just exploration, right? And there is that bifurcation or that separation of investment approaches, right? Where we have more of the retail space focusing on that high risk, high return opportunity, whereas the institutional space typically don't invest in that value proposition area or that growth proposition area. We have both. And as I just described, that growth proposition around exploration, to put it in numbers, is $10 million of our budget is going towards the growth proposition on finding these district scale tier one discoveries across our 40-kilometer proposition. And so that equates to about approximately 15,000 meters of drilling. That would be our biggest yet exploration program in the history of NorthIsle, right? So that's how we addressed that. Again, we're not doing it for that segment of the population. We're doing it because it's incumbent on us to do it because we have the 40-kilometer district 100% owned. I dare you to figure out another company that has not only the exposure to this district, fully exposure to this a district of this size, but all the information that is required to allow you to make very thoughtful decisions on capital allocation, right? Because in the end, we have amassed 60 years worth of data. That's 7 companies worth of data that expand from IP, MAG, surveys, surface sampling, stream sediment sampling. It would cost hundreds of millions of dollars to establish this level of information today around this district scale exploration I'm talking about. So that is what should keep that very high alpha investor thinking about this, because what we currently have, as Alex Davidson, our chair of our technical committee, says, we have a 30-year starter pit. Think about that, 30-year starter pit.
Sorry, what's a starter pit?
So it's the first 30 years of production. Our PEA of 130 million pounds of copper a year and 130,000 ounces of gold a year for 30 years is a starter pit. Right? So firstly, that's a bit obscene to think about it that way. But the condition around our growth strategy is to answer the question, starter pit to what? That is the value proposition of a district. You can't fake it. You can't just say you have a district and not actually have the ability to faithfully go after it like we do. And I think that's the one thing that differentiates us. If you look at all the companies with big copper projects, they don't have the expandability option value that we have. If you look at most of them, they don't have the leverage to gold that we have that funds big projects moving forward. I'd like to remind you that Wheaton Precious Metals is an equity investor into our company. This is the world's largest streaming and royalty company in the world that invested it into us at the equity level in the last offering. They just announced a $1.1 billion stream with BHP on their Antamina project last week, right? So that is such a really a reflection. Let's sit back and reflect on that. What the largest streaming company in the world has been identified by BHP by having the lowest cost of capital out of all the banks and all of the resources that BHP has the ability to access from a funding perspective. They've chosen Wheaton Precious Metals because they have the lowest funding capital in the world. And we have them as an equity investor for our project. That's the consequence of having something as meaningful as we have, not only from a value proposition, but from a growth proposition as well.
Just on the name, copper and gold. Okay, so you've got copper and gold deposits, which you maybe tell us a little bit about the scale and scope of your deposit. But my general question is why or how you make the decision as to what percentage of your NAV should be gold versus copper? Is that something limited by geography alone, or is that something you can control based on market conditions?
That's a really good question as well. Not only geologically, but also how we define ourselves as critical metals and how the government looks at us as a critical metals project, and how we then can still extrapolate or perhaps utilize the gold as the bridge. So as the PEA was described in February 2025, and we're not changing the format or the sequence of the PEA, over the life of mine, this project is almost equally copper and gold. And we determine that based on 130 million pounds approximately of copper. I apologize, 130,000 ounces of gold per year for those 29 years, and approximately 70 million pounds of copper a year for those 29 years. Okay. And so based on commodity prices at the time, long-term commodity prices, $4.20 copper and $21.50 gold, it's effectively an equal revenue distribution, copper and gold, with about 10% in other critical metals, including molybdenum and rhenium. Okay. So 45% copper, 45% gold, and 10% molybdenum, rhenium, which are critical metals. That's what allows us to say this is a critical metals project. It is a critical metals project. Having said that, when you use inflated numbers, not inflated numbers, but real numbers that are much higher in today's environment, analyst consensus for gold, as I said, is $3,200 per ounce, and it's about $4.60 for copper. Well, then, of course, the revenue breakdown is going to favor gold over copper. But we were in Ottawa recently, and obviously we're talking about multiple things, but specifically, this question came up from us to them, and they view this as being, as long as the project doesn't change, it is a critical metals project from a government's perspective. From our perspective, we don't care. Revenue is revenue, right? This is something that is the gold is going to be utilized to unlock the copper. Without this gold, the copper doesn't exist because of the cost of capital associated, the very attractive cost of capital associated with gold. So that to us, it's a funding tool. The gold is a funding tool for the copper. But having said that, it's also a tool that has attracted an exponentially larger pool of capital and strategics because it is unique in the sense that it has both copper and gold.
Tell us about your major milestones in 2026 now that you've already almost reached $1 billion in market cap, which I hope you'll throw a big party once you do. And copper is at all-time highs. What's next for you?
Sure. So on the development side, we are going to be sequenced in the release to get to the pre-feasibility. All this is funded by current cash in the bank. So we're going to start off with our infill drilling program, which should come out in the next few weeks, within certainly Q1 of this year. Then we go to the metallurgical results, which will be in around Q2. And there's a very significant value proposition that we are currently working towards on the metallurgy, whereby we are looking to improve significantly our gold recoveries in phase 2. Right now, it goes from about 80% recoveries in phase 1 to about 63% recoveries in phase 2. And that's a lot of gold to be throwing into the tailings pond. So we're now looking at a very optimized process that was triggered by gold prices going up, so we don't lose 30% of our recoveries into the tailings. So that's going to be a very significant, if we're achievable, it's going to be a very significant impact on the economics. That'll come out in Q2. End of Q2, we'll also update the resource estimate, which is going to include West Goodspeed. We've released all of those results now. And so the market has now opined on what the impact is going to be on our overall resources. And I think that we've been good at managing the market's expectations on what that looks like. So I think that is something that is going to also provide a lot of support around how much more we could expand this. Certainly phase 1 area through good exploration. And then finally, that's a culmination of the PFS by the end of the year. In terms of the exploration, as I said, we're already currently drilling our phase one of the initial program for 2026, which focused on expanding the discovery area in the northern corridor. We're also going to, in parallel, start the drilling for the phase two, which is the higher confidence intervals for the bigger system-wide discovery that we're looking at. That's starting imminently. And in phase three, which is the district scale up, the opportunity, which is where we don't have a lot of information, we don't have complete information around surface sampling and stream sampling, but we do have IP and MAG. Well, we're completing that information gathering exercise now, and then by H2 of this year, we'll be looking to initiate a drill program on that. So there's a sequence of events that's going to happen, catalysts on the growth side as well.
Final question before I let you go. Would there be any market moves in either copper or gold or any other market or just the macro environment overall this year that would change your strategy one way or another, change your timeline of events? Are you prepared for all scenarios here?
Yeah, I think it's a good question. I wouldn't say it's a market move. I'd say more of, do we have the capital and the sanctioning to do it, right? And that's really more bespoke to our story as opposed to a commodity price exposure, right? So I do think that, if commodity prices go down significantly, right, what is the impact on our PFS? Well, we all know that long-term analyst consensus pricing is effectively a reversion to a trending mean. And that trending mean encapsulates 2-3 years of historical results. And essentially it's a reversion to the mean. So for example, right now, because gold is at $5,000, analyst consensus is 3,200 because it's a regression to that mean. That's what long-term pricing is. So I don't, in an environment where if gold prices go down significantly, does a whole lot change in terms of what we would use as part of the pricing scenario in our PFS? I don't think so, because it doesn't spike up and down as quickly as commodity prices do. Otherwise, we'd be using $5,000 as part of our study, and this thing would be absolutely out of this world good from an economics perspective. So a direct impact, I don't see it being a problem. From a capacity and aggressiveness impact on how quickly we move forward the value and growth strategy, that's going to be a funding impact. Right now, we're currently 100% funded for the $10 million program, permitting, and PFS. So we're fully funded to the end of this year. And so I think that's the reason why we performed very well up to now, is we don't need to raise money. And if things go bad for whatever reasons, we're fully funded to execute what I've just described.
Excellent. Thank you very much, Sam. Where can we follow your work and stay up to date with your company's progress?
Indeed. So our website is great. It's a great place to start. www.northisle.ca. Our contact information is there. info@northisle.ca. And we are more than happy to answer any questions. A lot of them are coming in, especially based on the announcement that just came out on Friday.
Okay, good. Thank you for joining us. Thank you for giving us information. Thank you for sponsoring this interview, and we appreciate your education. Thank you.
Thank you very much, David. Talk to you soon.
Thank you for watching. Don't forget to like and subscribe.